In this video, I'm going to reveal a simple but extremely effective scalping strategy that works every single day. No indicators, no fancy tools, and no overthinking. Just price, structure, and one calculation that tells you where the market finishes its move. Most traders spend years chasing entries. They focus on direction, up or down, and that's where the confusion begins. Professionals see the market differently. They focus on location. Because price doesn't move randomly. It moves with purpose. It moves to a zone, completes its objective, and reacts. This entire strategy is built on that principle. When price breaks resistance, it doesn't run forever. It travels to a precise area, does its job, and slows down. And that area can be calculated, not guessed, not predicted, calculated. Now, this strategy is built on 4 core rules. Understand the market direction, mark the correct support and resistance, respect the breakout without chasing it, and apply one formula to locate the target zone. Those 4 rules work together through 3 simple steps. Step 1, market structure. Everything starts with structure because structure tells you who is in control. Open the gold chart, XAU/USD, and set the time frame to 1 hour, where each candle represents 1 hour of price movement. Then align the chart to New York time. Now here's the important part. You're not analyzing, you're observing. Price already shows you the answer. You simply read whether the market is bullish or bearish. Step 2, support and resistance. Support and resistance are marked only where price has clearly respected before. Not every small line, not every candle, only the levels that matter. These levels attract attention, and attention creates liquidity. So when price finally breaks a key resistance, most traders react emotionally. They buy late, they chase momentum, and they become liquidity. We don't do that. Instead, we slow down, and we focus on one thing, the exact price where the breakout occurred. That number is important, because that number feeds the final step, and this is where the real edge begins. Step 3, the formula. This is the step that separates guessing from execution. Take the breakout price and open your calculator. Find the square root of that price. From the result, subtract 1, then square the final number. That output is not an entry, it is a target zone. A zone where price statistically slows down, reacts, and very often reverses. Now let's see this play out in real time. Here price breaks at 4,445. That breakout price is locked in. The square root of 4,445 is taken. From that value, 1 is subtracted. The result is squared. That gives us the target price. Now we drop to the 15-minute time frame. And price does exactly what it is designed to do. It moves into the calculated zone. Momentum slows, and the move completes. Take profit hit. Now listen carefully. No strategy works 100% of the time. Losses are part of trading. Risk stays small, stops stay logical, survival always comes before profits. And in the next videos, I'll show you how to refine this further, how to apply it across different markets, and how to avoid the mistakes that keep most traders stuck. If this approach made sense to you, like the video, subscribe, and comment formula below. And if you want to see how this analysis is applied daily, I share market structure and scalping setups inside my free Telegram community. The link is in the description. This channel is for traders who think differently.